Debt. It can feel like a never-ending cycle of past due bills, high interest rates, and even collection calls. You want a way out, but most companies only deal with certain kinds of debt or offer quick fixes and even dangerous solutions that can destroy your credit and put you right back where you started. At Family Credit Management, we do things differently. First, we'll review your credit report to access who and what you owe. Then, we'll create a repayment plan that's in budget, lowers interest, and eliminates fees. We'll give you a roadmap out of debt once and for all by consolidating all your unsecured debt from all your creditors in our debt management program. You pay us once a month, and we work with your creditors to take care of the rest. For over 20 years, we've been helping clients get back on track to financial independence. Now it's your turn. Get your free quote today. Debt.
Hey, we are back another week. My name is Letitia Griffin, and I'm here to talk to you today about any types of problems or questions, anything that you have regarding your debt, finances. Those are the types of issues that we're here to talk to you about today. So over the next 30 minutes or so, if you got any questions, feel free to call in at 312-738-1060. Now, if you do not get the chance to call in, you can contact Family Credit. And they're a great resource. They're available. They've got counselors on standby for you to speak with. The number is 800-994-3328. Again, Family Credit's number, 800-994-3328. Or you can go online and you can chat directly with a counselor at familycredit.org. So don't forget, if you've got those questions, you don't get a chance to call and ask me, call in to Family Credit. So over the past few weeks, we've talked a lot about dealing with your debt and your finances, and there's been some questions, some good questions that have come about. We want to make sure that you know that you have the ability to take control of your situation, and whatever it is that you are looking to do, you can do that. Now, when you're thinking about your finances, the first thing that you need to do is know for yourself. Set a goal for yourself that you want to get things under control. That is step one. You need to actually look at what you can do to modify your behavior or make those changes internally so that you are better able to handle your finances. Because a lot of times we know what we want in life. We think we know how to get there. Sometimes we're not sure, but we just don't make the necessary changes in our behavior. So we'll talk about some different types of ways that you can change some of the things that you're doing so that your money works better for you. We'll also talk a little bit about collections and handling those collection agencies. Why? Because I've been getting a lot of phone calls this week about people that are dealing with the collection accounts and their score is constantly decreasing out of the blue because of these medical bills and collection accounts that they have no idea what to do with. So we will be going over that as well. Again, so we talked about that we want to get our budget in control. We want to make our finances better. First thing you need to do is set a goal. A lot of times we think about the way we spend our money. We think about those things that we want out of life, and we don't realize that our subconscious plays a lot on what it is that we actually do. So we can think all day long about how we want to put our budget in order, what we need to do to get that budget together, but we don't take the steps to actually do it. So we can think about it, and then we'll go to the gas station or to the grocery store and just spend money, based on how we're feeling. We could be hungry. Let's go to the restaurant instead of seeing what's in the fridge. What can I cook at home? Or if I'm at the store, what are some cheaper things that I can buy instead of spending all of my money on fast food? So it's all about how we start looking at things and looking at our wants versus needs. What are those things that we actually need in our life versus what we want, what we buy, what we spend on? So if you are interested, Family Credit has this really great guide. It's called 100 Small Ways to Save. And if you contact a counselor at Family Credit, they will send you out this guide. It's interactive. It's a great guide. I'll have some with me probably next week to show you. But it's got some tips or some things that you can do to cut your spending and cut money. What are those things that we think about? that we can actually cut down or cut out. Like if you are looking at your budget, one of the things that I want you to always do, look at your utility bills, see what you're getting charged for that you don't even know about possibly, or some things that you're not even using. One of the bills that, creates a huge expense for a lot of families is the phone bill. Your cell phone bill. What are some things that you can do there? You can talk to another phone company and see what it is that you can cut it out, or see if there's a way that they can lower those bills. So there's some things that you can do on your own to stop those spending leaks, the bleeding in your budget, and to get things on track. Hey, looks like we've got a caller. Hi, welcome to the show.
Hi, I am wondering, what would you consider a good credit score to purchase a home?
Ooh, now that is a great question, because a lot of people don't know. If you are looking to get a home, you need to have the highest credit score possible. But you can start purchasing a home at a score of 580. Now, if you've got a 600, that sets you like in a totally different category. So if you want to qualify for a home, again, you need a score of 580, and then you can get what's called an FHA loan. Those loans are secured by the government. The government has backed those loans to protect the bank, to say, hey, if you give this person a loan for this mortgage, we'll make sure that no matter what, you get paid for it. And so that's why those loans are available. They come at a lower interest rate, and they allow you to make a smaller down payment. So if you've got a score of 580, then you're good to go on a home. But you may want to look at trying to get as high as possible. So if you've got a score of 600, now we're in another category. If you can get to 620, that puts us into being able to qualify for a conventional. And the higher the score, the better your interest rates will be. So you can clearly see the difference. I had a client who was able to put down a sizable amount. She's looking at buying a home. She put down a sizable amount, but her interest rate ended up being almost 6%. Then we have why? Because her score was only in the mid 60s, 600s. She's probably at about 620, 630. But we have somebody else, if looking to get a better interest rate, if your score is a 700, then you really will get a better interest rate that's closer, that should be under about 4% or so. So these are things that you want to think about when you're thinking about getting your budget in control and figuring out what your credit is. So look at that. Look at your score. Look at what you can comfortably afford. And we want to make sure we're staying on track with our money. So if you're looking to get a home right now, get your credit report. Look at it. See what's on it. Contact a counselor at Family Credit, 800-994-3328, so that they can go over that report with you. Because a lot of times there's things there that even if we've got the score to qualify for a home, guess what? There's some challenges there that could stop us from getting that home. No one wants to go to a bank and be turned down, right? So call Family Credit, get a counselor to go over your credit report with you, and that way you can see what you qualify for and get your finances under control. Now, a lot of times what a lot of people don't realize is that if you are looking to get a home, like I said, your score is fine. You feel like you've got a good score, 600 or better, but there could be some things on your report that will stop you from getting the financing you need, whether it's a home, a car, a credit card, whatever. And those things are collections. So we wanted to touch a little bit on dealing with collections agencies, looking at those accounts and seeing what we can do about them, because they do stop a lot of people. And sometimes you may or may not be aware that they're even on your report. A lot of times when you look at your credit report and you notice a collection and it's a medical collection, there are a lot of cases where the collection agency, not only have they've been reporting on your credit report, but they may have reported 3 or 4 times on your credit report, different amounts, and they're all bringing down your score. So you do want to take a look at that and see what you can do. If you got questions, like I said, on dealing with that, feel free to call in, because we know a lot of people struggle with those collection accounts. The good news is that nowadays, with the changes that have happened with the updates to the credit bureau and how the credit bureau and the scoring models work, now we know that the medical collectors and the collection agencies, they can't send in your medical bills just because they went past due. It's going to take some time. So now you have 180 days before that account goes out to a collection agency. So while you still have that medical bill and it's at the doctor's office, start making small payments on it, because that's going to keep that account from hitting your credit report. And remember, we're working on getting our credit report better. So that's what you want to do. Looks like we've got another caller. Hi, welcome to the show.
Hi, does paying on my collection help increase my credit score?
You say, I'm sorry, can you repeat your question?
Does paying my collection accounts increase my credit score?
Okay, so it really depends on what your score is looking like, what your report is looking like, and how old the collections are. Because yes, if you're paying off bad debt, it should increase your credit score, but it depends on how long it's been there. So if you've got an old collection that's been there for a while and you want to pay that off, it may not increase your credit score like you want to right away. And sometimes it might even drop the score. But if it's a recent collection and it just went on your credit report within the past 2 years, then yes, you do want to look at making payment arrangements or trying to pay those accounts off, because that will improve your score. And that's what we want to do. And you may ask, why the difference, right? So we talk a lot about the credit bureau and the credit score. Keep in mind that your credit bureau report follows you for years and years and years, right? We know that the credit report, it follows us for up to 10 years with the information that's on there. But the score only looks at the last 24 months worth of history. So if you want to make things better, we want to look at paying off those things that just hit the report. Those are the things that we really do want to pay off. That's what we're paying attention to. So you're looking at the collections, new collections within the past 2 years that have been hounding you or harassing you or sending you letters, or they're on your credit report. You want to make sure that you make payment arrangements on it. Now, if you can't pay the whole thing off, you've got a couple of different options. You want to contact them, see, of course, what your options are. So you can do what's called settling an account. And if you settle an account, you are telling that creditor, yes, I know I owe you, I just can't pay the whole thing. So can you take part of it and consider that account paid in full? Give you an example. If you've got a medical bill and you've got, remember how I told you, like, sometimes the different collection agencies will report more than once. So let's say you've got a medical bill that's reported, same creditor, $500 one time, $100 another time, and then maybe a $200 balance after that. So they've hit your report 3 times, 3 different balances, and that's knocked your score down 3 times. So instead of you saying, okay, I'll give you the full 900 for all 3 of those accounts, sometimes you can say, I know I have 3 accounts with you, but I can only afford to pay 600. Well, if you take this 600, will you consider all of the accounts as paid off? And you want to make sure that if they say yes to that, if they agree to that, number one, you get it in writing, because you don't want them to go back on what they said to you. You want to have proof that yes, they said that they would mark them all as paid off. The second thing you want to do is ask and see if possible that they can remove the accounts from your credit bureau, because what better way to increase your score than if they were never there to begin with? They are the only ones that can take it off of your credit report like that. So you want to see if those creditors are willing to work with you. Now, your next option, if you can't do a settlement, you don't have the money to pay it in full, you do want to start making payments on it. Make sure, find out that it's a legitimate credit collection agency, and if it's on your credit report, 9 times out of 10 they are giving you information on how to contact them. So if you pulled your credit report, you should see their name, you should see their address, the account number, as well as their phone number. So give them a call and let them know, you know, this is my account, I'm trying to pay it off. And then you can start sending them payments of as much as you can afford each month to get those accounts cleared off. If it's a smaller balanced account, you may want to send them $10. And you may think, you know, what's $10 going to do? But just think about it. If you got that account that's reported on your credit bureau, it's a $100 balance, and you send them $10 this month, next month they're going to report that balance is $90. Then the month after that, $80. So even though you can't pay it off right this very now, and you can't just erase that debt like that, it's going to get better over time. And we have to learn that you didn't get into debt overnight, so it won't be a quick fix getting out. It will take time, and you just want to keep that in mind as you go through out trying to stick with your plan, because sometimes it does get challenging and you say, okay, I know my score is never going to increase. But keep in mind, once that balance says 0 on your credit report, that's a debt that you don't have to worry about. And then it's not about increasing your score like that. Yeah, it won't happen just like that once that balance is at a 0, because now you need to do some things on your end to make sure that that 0 balanced account does not affect you. What I mean by that is the secret of having a great credit score is to make sure that you have enough positives to counteract any negative that could come up. So you also want to make sure that you're working your plan. You want to keep things in order, right? So you've got these medical bills, you've got these collection accounts that you're struggling with, and you're making payments on it each and every single month. That balance is decreasing and it's going at your own pace, which is fine. But guess what? In the meantime, you've got your positive accounts, your credit card accounts that you may have, or you may have a mortgage or a car note that's reporting each and every single month. It's reporting as current. And so that's built into your credit history, right? You're making positive payments, so we're counteracting those negatives that are there. Again, if you need to find out a list of those collection accounts and you really aren't sure about how to go about reading your report, or you need some help with that, or even if you need some help contacting your creditors and setting up these payment arrangements, you can contact a counselor at Family Credit. The number is 800-994-3328. Again, 800-994-3328. Okay, now keep in mind, I know I'm just giving this number out to you, so if you do not remember, what you can do is a Google search later for Family Credit, go to their website and get all the information and the help you need. You can chat online with a counselor too. Looks like we've got another caller. Hi, welcome to the show.
Oh, hello. I just had a question. I recently started a new job and I'm making more money, so I wanted to start a savings account. What is your advice on how to really start building savings?
Okay. Well, if you got a new job and you know you're making more money, congratulations on that. Congratulations on the new job. And what you want to do is set a plan. Like, we're still working on setting our plan and cutting out our spending, but I'm glad you brought that up, because a lot of people don't even think about what happens when you get a raise or when you get more money. Think about the new amount that you will be receiving, and think about how you survive life without it. And also, you need to look at your debt. So you want to take a percentage of whatever it is your new income will be and put it to the side. Put it in a savings account. Establish a savings account. So some tips for doing that: if you're looking to get a savings account and you know that you can't really discipline yourself, you might even spend the money. Some things you want to think about is making sure that that money is not going into your regular account, your checking account that you use to pay your bills, and that is not linked with that account either. Because sometimes, if you see the money, you may spend it. We're human. It happens. So what you want to do is look at some other online options. You can look at online savings accounts and see what you can do there. You can also look at online investment accounts too and see if you can just allocate a certain amount out of your new paycheck to go towards your savings. And that's all about making your money work for you. Another thing you may want to consider, going to a different bank than what you have right now and maybe just opening up a savings account. You can also look at credit unions too, because credit unions are there. They are known for establishing relationships. They want to save and hold your money. They want to do other things too. They want you to get a car through them. They've got other products that they want you to use, but they're really good about, holding your money, and establishing that extra relationship. So if you are thinking about a savings account, look at those options. Look at what your bank does now, and if you want to go with that, you can. All banks can open up a savings account for you. Usually it's a $25 minimum for most banks. But also keep in mind, the difference between the savings and the checking is with the savings account, a lot of times you can't take out a lot of different deposits. A lot of withdrawals in the course of a month. Most savings account will limit you to maybe 3 or 4 withdrawals a month or transactions a month. They want to see you putting the money in, not so much taking it out, because that kind of defeats the purpose of a savings account, right? So you want to make sure that you're doing those things, that you're looking at your money, that you are letting it sit there, and that you're watching your money grow. Again, you can look at different options, and once you get a nice amount in there, you can look at doing a CD or a money market account as well, because that way you can start earning some interest off of it. And again, it's all about making your money work for you. But I do want you to take that amount out of your budget each and every single time you get paid, so that you know it's going into that account and you don't even have to worry about it. So we were talking a little bit on dealing with the collection agencies, right? And I have a lot of people that are struggling with this. Again, I was working with somebody this week, and they had a lower score than what they thought they should have. And it's because they had a new medical bill hit their account. They hit their bureau and they weren't even aware it dropped their score. So you want to keep your eye on it. Monitor your report. Remember, you do need to pull your credit report throughout the year. You can get one bureau from each of the one report from each of the bureaus, and there's 3 bureaus. So that's Equifax, TransUnion, and Experian. Make sure you go to annualcreditreport.com to get that report. Looks like we've got another caller. Hi, welcome to the show.
Hi, I'm wondering how I can stop collection calls.
Ooh, that's a really good question. Aside from moving or changing your number, a lot of times people don't know how to handle those collection calls. But sometimes we get calls and it may not be a collection agency for us either. So you want to actually make sure that the calls you're receiving are about your debt. First time, you can talk to them and see if you can find out a little bit more information about why they are calling you. What account do they have? What are they saying the balance is on it? And how long ago was it? Get that information, but it's all in the way that you do it. Now, once you know, and you know if it's not your account, then you do need to let them know that. You can let them know, I've never even heard of you. This is not my debt. Stop calling me. They shouldn't bother you anymore after that. But sometimes ruthless collection agencies do bother you. So what you do is you get their information, whoever you're speaking with. Make sure you take down the name of the representative, the time of the call, and where they're calling from. You can ask them what department they're in for their extension. And sometimes, hopefully you get that answer. But sometimes there are some nasty collectors out there that will make something up, or they won't give you that information. They just want to keep harassing you and keep hounding you. Now, be careful when you're on this call. I don't want you to hang up right away. And the reason why I say that is because a lot of times, if there are, there's what's called a robo-dialer out there. And sometimes when you hang up on collectors, they can automatically set you for the robo-dialer so that it's constantly harassing you and giving you those calls, those hang-up calls that you get each and every single time. You can go and you can opt out. That's something else we'll talk about in another show. But when you're dealing with collection agencies, now you've got that information, you know who it is. You want to try and do you want to do a cease and desist option with them. And basically what a cease and desist is, I've only got a few minutes, so we'll just go over this real quickly. If you're getting collection calls, you want them to stop. You know you got that debt, you can't pay it. You simply need to put that in writing to the collection agency and let them know, hey, this is my debt. No, I want to pay it. I do want to pay it. I just can't pay you with what you want to be paid right now. As soon as I get some money, I'll take care of you. You want to send that to them. And there's a proper way for you to do it. It's called a cease and desist. You can contact a counselor at 800-994-3328. And they can give you some information on that. You can chat online with a counselor too at familycredit.org. But basically, you're going to send this notice, return receipt, so that you have proof that they got it. And then once they get it, they can only contact you for 2 more reasons, okay? They can contact you to tell you that they're not going to call you anymore, or they can contact you to let you know that they're going to sue. And not a lot of collection agencies have that power or that privilege, because in order for them to do that, they'd have to actually own the account. We can talk about that some more too. Or you can reach out to a counselor, Family Credit, at 800-994-3328 to find out more information about the cease and desist process. Once you send that letter and they get it, they should not be calling you anymore. But typically you want to do it in the right way, which is why I do want you to contact a counselor. You can also go online and research that cease and desist process and see better how you can make that work for you. Dealing with collection agencies is hard, but it doesn't have to be. You have rights as a consumer, as an individual, for them not to harass you and for you to get the information that you need on your debt so that you can take care of it. Now, how you take care of it is really dependent on your budget and how you feel you can comfortably afford it. So if you've got any other questions, feel free to give us a call, and we'll be back next week. Until then, contact a counselor at Family Credit, 800-994-3328. 888-888-3328 or online at familycredit.org. So we'll be back next week to keep this going, talk to you about some other topics dealing with money and finances. Take care.